Two Bowls in a China Shop is brought to you by these great companies that are giving us money to let you listen to their stuff.
Bullshit, Kyle. We make this show. You and me. Two Bulls in a China Shop is brought to you by us.
Someone's got to pay the bills, Dan, because it's not our trading.
All right, roll them.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face. Hello, everybody, and welcome to the China Shop. I am your host, Kyle, and joining me for today's news update, or weekend review, or whatever we're calling this thing now, is Erik from ES Invests. But before we dive into talking about the news and trading and all that other jazz, I'd like to take a quick moment to say thank you to our sponsors and friends over at Manscaped, Trade Pro Academy, and Orderflow Labs. Manscaped is the best of men's below-the-waist grooming with precision-engineered tools for your family jewels, and with Manscaped getting into the world of beard care, now is the perfect time to take advantage of our exclusive offer of 20% off and free worldwide shipping using promo code 2bulls at manscaped.com. As always, that is the number 2. When it comes to institutional quality trading education, look no further than tradeproacademy.com. In our free Discord server, you'll find instructions to take advantage of our discount with them as well. For all you degenerates who enjoy trading futures, you'll definitely want to look into the custom tools and studies over at orderflowlabs.com. Of course, if you're not following Erik at ES Invests on Twitter or checking out his YouTube or OnlyFans, you definitely need to do that because that's some of the best market-related content out there. And then lastly, be sure to reach out with your suggestions, corrections, questions for future guests. You can do that via email at 2bulls@financialineptitude.com or join that aforementioned free Discord server where a bunch of amazing people gather to share our struggles and lessons learned with other like-minded market aficionados. Be sure to put all those links in the episode description. Okay. Now that we got all the self-promotion bullshit out of the way, let's talk about your week. You just got back from Florida, right?
Yeah, I got back the end of last week.
Why would you want to go to Florida?
Well, I heard that when it's cold, that the iguanas freeze up and they fall out of the trees. So it sounds like a spectacle. So I wanted to go see that.
Fuck, I want to see that.
Yeah, I didn't see it though. So newsflash, it's a giant waste of time.
Oh, is it a true thing, or is it one of those things that people say happens but no one's ever seen it?
Apparently it's fucking true, but apparently also only happens when I'm not there. Because as soon as I left, the people I was hanging out with, they were like, bro, we're seeing them now. So
more than likely, there's going to be a link in the episode description for a video of that happening.
Yeah, pretty grumpy that I didn't get a chance to see it in person because I was thinking it would be kind of cool to try to catch one as it's falling out like a piñata.
Did you meet any Florida men while you're out there?
No such luck.
Dang it.
I was trying to find a place to go wrestle a gator because because my college roommate, that's one of his dreams, was to wrestle a gator, and in my everlasting competitive fashion, he hasn't wrestled a gator yet. So if I could wrestle a gator before him and do his dream before he gets to do his dream, it would leave me just unlimitedly satisfied with myself.
There's not much more satisfying than doing somebody else's lifelong aspiration before they do.
Bingo, especially because it's not mine. That's the best
exactly.
part.
Then you'd be like, didn't enjoy it. But just about to tell him.
It was whatever, dude.
Yeah.
Like not a big deal. Kind of stupid.
Gators are pretty weak. All you do is hold their mouth shut. They can't do anything.
Right. Yeah, exactly. Apparently their opening force is pretty lame. So
all right. Well, should we talk about some of the headlines here? I can go through and...
Why does North Korea have glass bottom boats?
Oh, I feel like I should know this joke.
So they can see their Air Force.
Yeah. Oh man. I thought balloons floated.
Yeah. Well, no shortage of those apparently.
Oh, shit. Yeah, and not balloon-related news. Let's see. On the headlines I got lined up here, I've got Buffett trimming his stake of Taiwan Semiconductor Materials. Got the U.S. retail sales, and there was a special meeting called by AMC. It looks like they're finally trying to convert those APE shares into AMC shares, and they're also trying to engineer a 1-for-10 reverse split. Which of those three tickles your fancy?
The TSMC I find a little curious.
I
I
do
I
too.
I don't know the detail behind the position. Do you? My estimation would be that it wasn't Warren Buffett himself that even established that position, but one of the people that helps him manage the fund. But I'm curious if you know more details behind it.
I have no detail. I didn't even realize he had taken such a big stake. I just saw the fact that he'd sold it within less than a quarter. My guess was that he'd already hit his profit target.
Yeah, I mean, it literally, well, not literally, very close, doubled in price over the last 6 months.
Right.
So I could see that. It's interesting though because he generally is pretty not into tech, even tech that he
Mhm.
understands. You know, his line is if you don't understand it or whatever, and that he has a hard time understanding technology. But I think he clearly undersells himself because he's had plenty of conversations with Bill Gates and whatnot. So the dude
Right.
knows how it works. But yeah, it was interesting to see that position, but I also know that he's grooming, I forgot her name, essentially to start taking the reins from him. So part of my curiosity is if that was a position that the other people that are helping run the fund are taking. But
I'm not sure. Like I said, my guess was that. I mean, it could be rebalancing too. I mean, if something goes up that much, then yeah, why wouldn't you? I mean, it's up 40% from the October low, which he grabbed it in November. So that was while it was. That probably is what led to that big spike in November,
sure.
if I had to guess. Because when Warren Buffett does something, a lot of people do it too.
Yep. Yeah. But overall, I think that's interesting. But yeah, other than that, I mean, to me, it's just, fund rebalancing. But obviously, because his name's involved with something that's in the
Mhm.
tech sector is what I found curious.
Well, it's a good one to go into as far as tech goes. I mean, with the US trying to lay down, infrastructure to encourage more chip production at home. And then after seeing like what happened with the shortage that we had during the COVID slowdown or lockdowns, like it seems like a good bet. Like if you're gonna bet on any tech, semiconductors seems like a good one.
Yeah, but it also seems curious because most of their positions they hold for longer periods of time, and because of all the U.S. investment within the U.S. on semiconductors, that would
Mm-hmm.
actually be kind of a big problem
Mm.
for Taiwan Semiconductor. Not that we're gonna, steal the food from their mouth anytime soon, but
Right.
just for his typical durations, I do find that interesting because he talks about things like moats, right? Barriers to entry or
Mm.
dominance within an industry. And other than the fact that, essentially they've been doing it for a while, I'm not exactly positive that if the US started incentivizing enough domestic production of this stuff, that they would be able to maintain such an advantage.
Maybe he's trying to convince them to move to the US and leave Taiwan.
Yeah, pretty interesting.
It's like, hey, China's further away.
What did you make of retail sales?
I didn't really pay attention to it, if I'm being honest. I saw that it was a surprise beat. And I was surprised by that, but I'm actually just reading it now for the first time.
Got it. Yeah, the retail sales I found interesting, and I'm actually going to drop a different link in there that's from the census. I just think it's
The
kind of a
real one.
yeah, it's a little bit of a more direct source. I think
Oh, much better.
this is super interesting. And it's because what we saw with CPI coming in a little high, which that was interesting,
Yeah.
and the market's reaction to that being pretty tame, realistically speaking.
Well, I mean, a lot of people were expecting it to come in higher, I thought too, though.
Um,
Like most of the economists I saw commenting on what to expect are predicting a higher than uh, consensus.
I agree with that. And regardless, I'm not sure if that sentiment was priced in. It's obviously really difficult for me to be able to break that out.
Well, it obviously wasn't because you could see that the chances of the
Exactly.
hike, like the percentage chances of that, definitely increased after the CPI.
Exactly. And yeah, exactly. So I do think in general it's an interesting note just because obviously we're not at a point where everything is completely under control, but I also think that the market isn't super concerned about it just yet. I think mostly what we're seeing is just a shift in market focus,
Hmm.
but I think seeing retail sales come in really bolsters a lot of that. And overall, I think the other thing that is important to keep a pretty close eye on is consumer debt, which is going up,
Oh,
actually, what I would consider to be at a fairly alarming
more
rate.
than doubled.
So that part, Yeah, that part I find really, really curious. I don't think that that bodes super well, but I also think it's a little too early to make any, significant, takeaways from it. But I do think we're seeing exactly the style of turmoil that we're still expecting to see. Like, these different economic indicators are not lining up super perfectly, which again, I don't think
Right.
they should. And I think that the market is still reacting pretty fairly to it all, which that really surprises me more than anything.
Yeah, the fact that we haven't just completely tanked yet on that CPI and then this one.
I genuinely was
Yeah,
surprised
me
about
too.
that. Like, I didn't expect us to like fall out of bed, but I genuinely did expect to see a little bit more of a reaction.
Yeah, I mean, I watched that rebid off of the '08 on the day CPI came out, and I was like, God damn, that was strong.
Yeah, I think CPI coming in where it is now is okay still, but I think we're seeing a couple things. We're seeing obviously the effects of using it's like the tail wagging the dog. Inflation is like one of the most lagging indicators for the economy.
Right.
So I think we are just seeing a general shift to more proactive estimations, especially for the market, because it's a discounting mechanism that tends to look out 6 to 9 months. So to me, it looks like we're prioritizing earnings releases, forward projections, and guidance, things like that.
Yep, I would agree with that. Let's see. The AMC interest you at all?
I it doesn't interest me, but I do think it's a curious story. So I think we could touch on it real quick if you wanted. What are you taking away?
This is something that Adam Aaron's been trying to do basically since the first time the price shot up on them was to try to issue more shares in order to raise capital to try to, fix some of the debt structure that the companies had. They were able to get that special dividend to create that ape class, and they've been selling that to kind of be like a workaround because the shareholders kept voting against it. My guess is that this is just him finally getting getting his way.
So what's I didn't see the timeline on it. What does it look like for the conversion of ape shares?
So it's supposed to be a 1-for-1, I thought, but in one of the lines it says here that each one is worth 1/100th of a shares. Let's see here. It says that each ape is a depository share, represents an interest in 1/100th of a share of Series A convertible participating preferred stock. Each ape is designed to have the same economic and voting rights as a share of common stock as described in the governing instruments.
Got it.
So when I read that, then that tells me that ape should be worth like one ape is or 100 apes are worth one AMC. Am I taking that away right?
Yeah. Yep. At least based on what you were saying, I think that's accurate.
But then the pricing should be 1/100th of a share then, but it's more like half. I think apes are trading around $2 and AMC is around 5.17.
Yeah, so it could have just been the ratio that they issued them at though.
Ah, okay. Okay.
S- So but yeah, I don't really. It's funny enough. I actually have shares of. I think I've told you this. I have shares of AMC and Ape.
Hmm.
But it's literally just to support those people.
I have
Otherwise,
some
I
too.
I think it's a yeah, I think it's an awful investment. But
At this point, yeah. It's
yeah,
not
just
if you're holding it for the moonshot, like yeah, you might want to rethink that.
day late, dollar short. And I think the main thing I enjoy about it is just seeing at least the continued pressure
Hmm.
that it tends to put on just larger institutions because fuck those guys.
Right. Yep.
Summary of my feeling.
All right. Well, let's move on, and I want to revisit the meta trade that we discussed the last time you were here. That was 2 weeks ago, actually.
Got it.
And I was actually lining this up to take the trade at like with the parameters that we had discussed. I think it was to sell a 195 call and then buy like a 220 out the money one to like cap the risk.
Yeah.
So I started lining that up, and then I was trying to figure out how you managed risk. And I realized I didn't understand your mechanism, so I actually disqualified the trade for myself.
It's inherently managed.
It is, but what's the win rate on these types of trades then? Because you're looking at a like I think the payout potential was between like $3 and $5, depending on what time of day you were looking for the one that you sold.
Hmm.
But then your upside risk is like 2,500, like 195 to 220, right?
Hmm. Yeah. And typical payout protocols for something like this, especially as it pertains to expected return, really depends on a couple things. And the fact that it's like post a binary event actually makes it a fairly effective trading tool.
Hmm.
So I would track the overall bucketing of expected returns, not based on it being a post earnings short call. Really, is what it is attempting to be. It's just we're
Right.
just winging the upside in case we had a blowout for whatever reason.
Hmm.
But if somebody was uncomfortable with that payout mechanism, because that's why that wing is so far, is I'm
Right.
attempting to just treat it as a short call post earnings. And the way that I tend to treat those is I'm literally just using size as my primary risk control metric. Like if it started rallying to 200, 210, I wouldn't touch it. I essentially would just take it to expiration and it would be whatever it would be,
Hmm.
because I've seen enough of those, especially if we price volatility effectively, which we would have in that scenario,
Hmm.
post earnings, then it all essentially will come out in the wash. But the short answer to your question is, on that specific trade, you will tend to have a much higher win rate, but as you're highlighting, a fair loss severity.
Hmm.
So, one thing you can do if you don't like my approach, and I definitely have a more cavalier approach just based on the way that I trade my account now. So, if I were trading my account back when, it was a $200,000 account, or like I'm being way more aggressive,
Hmm.
in that instance, I wouldn't probably take it to expiration. I probably would do something like a 400 or 500 times credit received spot where I want to cap the loss, even though I already have it a wing on it.
Hmm.
That is only if it's before earnings.
Oh,
If it's
okay.
after earnings, I would just use the correct wing size if I was uncomfortable with the risk.
Oh, so
Because
you can instead of just going one for one, you can was it weight them differently, like take more of
you
the
could
out.
do that, but specifically, I'm thinking just in terms of the width of the wings.
Hmm.
You can modify the ratio, like you're talking about there, to get the correct risk profile. But it's specifically structured as a fairly high probability directional play.
Hmm.
So yeah,
All right. Well, thanks for clearing that up a little bit. I was just wondering if you had like stops in place or if you have manual points where you would cut it. Like, okay, this is not moving after, a certain amount of time, or if it moves too far against you, do you then look to get out or anything like that?
I think if I was like truly trying to optimize, there are definitely things that you could look at to do
Hmm.
exactly that. But I've done enough of these at this point that the optimization to me just it isn't worth it. And
Gotcha.
yeah, the overall risk is going to be controlled first via size, and second via that far out of the money wing. And if we felt like, oh, I don't like the idea of making whatever it is, 400 or 500 bucks or whatever the fuck, and risking 2,500 for it, you could take that wing in, right? So instead of the 220,
Hmm.
we could buy the 210 or whatever the case is. But one of the most important things of those kind of trades is to let them work. And that's the biggest
Hmm.
problem with people that try to trade short premium strategies, is they want to interfere as soon as things start not looking right. But the problem is that completely skews the probabilities. You're going to start realizing additional losses, especially if you're not pricing volatility well. So yeah, for something like that, especially after the release, I would try to interact with it as little as possible. But if I put a wing on it before the release, and we had like the move we did, let's say I, instead of the entry that we talked about, let's say it was before earnings,
Right.
and for whatever reason I wanted to fade Meta. I don't feel that way. I wouldn't have felt that way, but if I did, and we set up a wing like that, essentially I would probably close it right after the release, depending on how the option was priced, because the move was completely wrong.
Hmm.
And if there's a way for me to salvage any value out of the trade, I would do that, because otherwise you're just going to take it to expiration for a full loss.
Right. Right. That makes sense.
Yeah.
Yep. So good thing I didn't do it then, because I did not understand the mechanisms behind it, and trading that just probably would have been a recipe for disaster.
Yeah, and it's a good question, especially because a lot of people I think try to overcomplicate verticals in
Hmm.
general, and to me I do videos on it pretty regularly because I don't think people understand how much they're fighting against themselves when they do that. Because in an instance with Meta post earnings, I wanted to fade to the downside, and the only reason why I chose a selling strategy there is because if we entered it shortly after the market opened, there would still be quite a bit of volatility
Hmm.
that needed to creep out of those options before the end of the day.
Especially with that size of a move.
Exactly. So there's going to be some volatility that we can harvest, but otherwise, I mean, a simpler strategy in those kind of instances is just buying a put or, whatever the
Right.
case is, which also inherently controls the risk. But the problem with those short premium strategies, as soon as people start up trying to spread off using wings, right? So now we have a
Hmm.
vertical. We're already counteracting some of the hypothesis of the trade if we think implied volatility is overpriced, but then we're buying a wing, which inherently then would also be overpriced more likely than not.
Right.
You're decreasing our edge.
Yep.
And then another part of this trade that's super important is to allow the passage of time, but now we put in a stop. So if that stop is hit, we're disallowing the passage of time. So we've now decreased our edge even more. So I think it's important to really identify the hypothesis for the trade. And in this case, again, it would be I would essentially choose the short leg to be super far out of the money and want to fade it to the downside for the volatility and the price movement. But if you were more directional, you could also include whatever your technical analysis would say. So let's say it was trading around 190 or 187 whenever, well, it would have been even lower, like 183 when it opened
Hmm.
that day. And you put on this short trade and you say, okay, based on my Fibonacci's or whatever it is that you choose to use in your technical analysis, and you see, okay, the last previous resistance that looks strong is around 201, and I'm actually looking at it right now from back of summer of last year. So maybe we're using that volume node as your resistance. Okay, so if it starts breaking through that with a sustained move, maybe that's where you choose to exit
Right.
early, right? Because that's just saying my hypothesis was wrong if it's purely a directional play. But because there's a volatility component, you got to let it go.
My name is Richard Friesen. I am the founder of the Mind Muscles Academy, and we're here to support traders in their journey to consistent profitability. Having built a trading firm and hired many traders and also a coach for hundreds more, one of the biggest surprises, and you're not going to believe me, I don't expect you to believe me, is that traders are not prepared for success. And the reason is if you are a successful trader, it puts you in such a powerful position. It is outside of your identity, who you are, and your beliefs. And if you don't solve that problem, it means you're cutting off your upside and you have unlimited downside.
Episode 5 of Trade Runners will be out Monday the 20th. If you haven't heard by now, Manscaped now sells beard products. That's right, once again revolutionizing men's grooming with the brand new Beard Hedger Pro Kit. From a beard trim to a fresh shave, the technology behind the Beard Hedger Pro Kit allows you to shape your signature beard look. Now you can finally use Manscaped products to make your drapes match your carpet by going to manscaped.com and using code 2bulls for 20% off and free shipping. God damn, I was going to make that joke. Our friends over at Manscaped were kind enough to send me the Beard Hedger Pro Kit, and I gotta say, I was impressed with the quality and performance of the products. My thick, coarse beard hair has been giving me trouble with trimmers in the past, but the Beard Hedger was able to cut through the thicket without any tugging or discomfort at all. And because the trimmer has one rotary wheel with 20 length settings with only one guard, I don't have to worry about losing or breaking attachments anymore. So I've tamed my mane, and now you can too. No one likes a weird beard, so say goodbye to your stubble trouble with Manscaped's Pro Beard Kit. It all starts with that beard hedger that I mentioned. The thing's a juggernaut of fixing faces. Not only does it have the trimmer with the rotary wheel that gives you the 20 hair cutting lengths on just the one guard, it's also waterproof so you can shave in the shower and avoid all the hair in the sink. The titanium coated T-blade is tough on hair but smooth on your face, leading to a single stroke efficiency that brings satisfaction one stroke at a time. Phrasing. The Pro Kit doesn't end there though. They also created 4 dermatologist tested formulations for your post-trim care. First is the beard shampoo and conditioner. Gotta remember that all your hair is different. Beard hair, as I mentioned, is more coarse and easier to damage than the hair on your head, if you have hair on your head. That's why the kit has made shampoo and conditioner specially designed to moisturize, reduce ingrown hairs, replace natural oils, and promote beard health. Next, the kit has Manscaped's Beard Oil, an essential piece for your main facial accessory. No one wants a guy whose beard is brittle and dry. The oil relieves dryness both on the beard and the skin beneath while adding a little shimmer and shine, which makes you look extra fine. Cap off the kit with the Beard Balm, a pomade that shapes, styles, moisturizes, and tames for a sculpted look to attract any fellows or dames. The Pro Beard Kit also comes with 3 free gifts: beard brush, comb, and scissors to ensure your beard is ready to impress. So get 20% off and free shipping with code 2bulls at manscaped.com. Of course, that's the number 2. That's 20% off with free shipping at manscaped.com using code 2bulls. Manscaped Beard Hedger, 1 stroke, 1 guard, 20 lengths. I've been having, I think one of the things that's helped me is actually writing down my hypothesis is wrong when, and having an actual like written out thing that tells me that, okay, this is when I know I'm wrong. So that way I'm not always clinging to the same bias.
Yeah, super smart. Yeah. Typically, if it's a pure directional play, what I'm going to do is have whatever the spot that I'm wrong, it's going to be an alert on the chart.
Gotcha.
So I will immediately bake it into the chart. And as soon as it hits that, it means I'm wrong. I actually have that right now in ConocoPhillips. I just established a position in there. And what do I have? I think I have part of a coverage triangle. Yeah, so I bought some shares at 111.12 and I sold some short calls at a ratio against those shares. But the main thing is, my basis is 111.12. So what I'm doing right now is I'm looking at the most recent volume node on a 1 year, which is like 99.68, somewhere in there. And then there's kind of a point of control that's centered right around 97. And then there's a little more volume at 94. Long story short, I'm using that as that entire zone essentially as my floor.
Gotcha.
So the position as I structured it, it's a bullish trade, even though I have short calls against it. I want it to go up. And if it falls below the 200-day moving average, which is what it's tinkering with right now, then that's kind of like the first
warning
red
sign.
flag.
Yeah.
And I have an alert for that. And then if I see it start to move down to that first level of support, kind of again determined around that 99.80 handle, somewhere right in there, that's the second. And if I see it fall below and outside of the lower point of control or the lower value area, which you can kind of define it like 94 would be the outside of it, then I'm just completely wrong in terms of my timing and I'm out.
Yeah.
And at that point, I'm taking a 15-point haircut, something like that. So I tend to be a little more cavalier in those kind of trades anyways, because I like to give it a little more room. I don't like to hover over it. I'm not like the US Investing Championship. I talk to those guys a lot. That's why I refer to them a lot. But their timing is very different. They want to leave very little room to be wrong. And they're okay taking, 30 positions to get 4 that are timed perfectly.
Yep.
Whereas I have a little more luxury because a lot of what I do is trade derivatives as well. So I don't have to be that precise. And I'm using really options and volatility to bolster the position to still give me some room for error. But it's just a slightly different example of using predefined zones as exit points based on an underlying overall assumption.
All right. With about 3 minutes left, then I'd like to cover a trade I did make this week or last week and get your opinion on how you would have structured it, because I'm pretty sure you don't like buying naked calls as a lotto run for earnings.
Is lotto? No, but I do think buying calls is okay. Context dependent, not my typical. So yeah, curious to see what you did.
Okay, so Palantir, I was looking at some of the other stocks that had my watch list, things like Sonos and other companies that when I was first starting out, I had noticed that they all kind of tended to run together. So I was seeing a lot of the stocks on my watch list putting out some really good earnings.
Okay.
I looked at the chart on Palantir and I was noticing the green volume higher than the red volume. A really interesting day on the 24th. And then
of January.
Yeah, 24th of January.
Okay.
That really big green candle that
Yep.
looks like sellers did come in and try to erase it. broke above that 200-day moving average, came back down into the band there. I think it was actually above the 200-day moving average when I purchased my calls, because it was on, I want to say it was Wednesday or Thursday. And I think that
Above the
was
200?
part of of the 200-day moving average. It was above it
Oh,
the
interesting.
day I bought them.
Mine shows, Wednesday,
I
the
use a
2nd
simple
of...
moving average, not the EMA.
Oh, you basic, huh?
I'm very basic. I like basic.
So what day did you buy?
I think it was 2 days before. So I think it was I think it was Thursday, actually. I think it was Thursday.
What was the date?
The 9th.
Got it. Okay.
It might have been a couple days before that. But either way, my assumption was that volatility would increase as we got closer to the uncertainty of the earnings, and that was absolutely not the case. So
yeah, you were too late.
Yeah. So that was mistake number one. So I bought them at 30 cents.
Just a quick note on that.
Yeah,
so
go ahead.
Typically 2 weeks out is when you would need to be in.
Okay.
So you were just too late on that part of the assumption, but continue.
I bought them at 30 cents on whichever day that was, a few days before the actual earnings. I mean, it still worked out in my favor. I picked my target based on the gap that was left behind in August of 22. So I was shooting for $10 calls. And then I sized it as basically an all or nothing play, right? The max risk that I was willing to take on the trade, that was the number of contracts that I purchased. And then today I trimmed half of them out at 2-to-1 risk reward. And then I've got the other half that almost filled at my 4x return, but just missed it.
Do you have a trailing stop in there?
No, I'll just close them out on Monday or tomorrow morning if they hit break even. I'm at a computer all day, so I can watch them.
Got it. Yeah.
Again, I bought March expiration too because I wanted to have plenty of time to let that work. The same thing that you talked about. Like, I don't like the 0 days to expiration or the weeklies just for that reason. They tend to like sometimes you'll get a move. It's the move that you want, but it doesn't happen fast enough for you. Like the more time I can get on it for a decent price, then the happier I am.
Yeah, the only problem is with you going, I assume those were out of the money, yeah?
Yes, they were.
Do you know the delta?
At the time, I do not remember.
Okay, because the only downside to that is this was an earnings play for you, yeah?
Yes.
The problem with going out to March is, especially with out of the money options, you're gonna get gypped on the move. And what I mean by that is because it's out in March, you're going to have slightly lower gamma, especially because they're far out of the money and still further out in time. So you didn't get the kick, even though you were like completely directionally correct post earnings in your assumption. So that's just part of this perpetual dance that we dance is if it wasn't tied to earnings, then I think your hypothesis in terms of expiration selection was probably fine. But because it was tied to earnings, I think you nerfed yourself a little bit unnecessarily.
Okay.
Because you're going to experience less of the move that far out.
Interesting. Okay. Yeah, it smooths it out a bit. The same thing that saves me time decay is also hurting me on the short-term volatility. Am I understanding that right?
Pretty much. Yeah. That's fair. And because the other thing, like, here's another structure that could have fit your assumption is you could have stayed in March if you were so inclined, but instead of going far out of the money, if you went far in the money, then you're going to experience more of a 1-for-1 move because your delta is going to be higher.
Right.
You're going to pay more, so you're going to get less of that compound return effect, meaning 500% returns. But you're also negating a lot of theta in that circumstance because you're so far in the money. Yeah.
I think the problem then is I wouldn't been able to afford enough to be able to actually trim too, and I don't like having just 1 or 2 contracts.
Got it. Yeah. So then in that instance, I think you kind of, selected, it was a reasonable rationale. I think the timing on the entry, if it was to benefit from an expansion in volatility, you were a little too late for that.
Or too early. And then I could have bought them the day before at half the price.
Yeah. Yep. Exactly. I think, that's the correct framing. I meant you got into the position too late. But
right. Oh,
I
gotcha.
think,
Yeah.
yeah, if you were trying to capture the expansion and volatility. And
Mm-hmm.
then I think the other thing is, if it is an earnings play, I would try to keep it closer to the earnings release itself,
Yeah.
even though you do increase, like you're talking about that exposure,
Mm-hmm.
but maybe like a week or two post earnings, no more than 2 weeks post earnings, especially if it's a long play for me.
I like it. Thank you.
Yeah, it's a fun
all right.
trade.
It's actually really interesting, the earnings too. It was the first time Palantir is profitable, and they actually issued guidance expecting to be profitable for the year for the first time ever in their history.
That's interesting because it
Yeah.
looks like they came in at a penny back in November as well when they were
I wonder if that
estimating
wasn't
that.
adjusted then, maybe.
Oh, maybe.
That's
But
possible.
yeah, no, that's interesting. I don't follow them too closely. I know that a lot of people like to trade it, but
Yeah, I mean they increased their U.S. Customer base by 79%, I think. Something ridiculous. I mean, like, there's a lot of things to like about that earnings report, and my goal was to close out the other quarter of my position um, at my target, which just, like I said, I missed it. I think 10 contracts traded at 90 cents, and I just missed it by a tiny bit. Probably should have dropped it down and just got the fill, but and then I wanted to keep the other two.
yeah, don't be a dick for a tick.
Yeah, exactly. And then I was going to keep the last quarter for basically just to hold it to expiration and see if it if that news propels it further.
Yeah. The only thing I would do with the lingering position is just have a stop in place, whether it's a mental stop or not.
Yeah, I'd put the stop at break even basically on those ones
because you said you have the tens.
Yeah, $10 strike. Yeah.
Yeah, so theta decay on them is going to be a motherfucker for you.
Yeah, once it's
literally where it's the highest.
Very soon. Yeah, I think 30 days out is when it really starts to fall off a cliff.
60.
Oh, 60. Oh, I thought it was 30.
60 days out, theta is going to be pretty aggressive. But if we look at, for example, what's the expiration for you?
March 17th.
17 March. So the at the money theta decay is about a penny when they're trading for or yours are trading for
80 cents right now.
80 cents, and it's a penny. So it's like huge, right? Mm-hmm. So if we zoom into 2 weeks out, something like that, you'll see that it's like 2 pennies. So it'll accelerate even more still from here. But this is really where it's going to be pretty damn high.
Interesting. Okay.
Yeah.
All right. Anything else you want to leave us with before we wrap things up here?
No, it's cool. I enjoyed integrating a little bit of trading stuff into this stuff. So, I think that I'm stoked that Palantir trade worked out.
Yeah, I was happy about it. But there's always things to learn, right? So I was really excited to review that with you and hear how I could have improved it. That's the thing that I think we sometimes forget to do as traders.
It's all about optimization, man.
Yeah. All right, folks, that's going to bring us to the end of today's episode. I'd like to say thank you to everyone for sticking around to the end, and of course, Erik for joining me. As always, you can check out his YouTube channel at ES Invests, and you can check us out at twobullsinachinashop.com. Be back in your ears soon with another exciting episode, but until then, violate that 5-star rating and take care. Erik? Can I get a bye?
Goodbye.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.
No, not even gonna laugh at my violate the rating button.
I actually was very proud of that so much. That was so good. That was like probably one of your best exits yet. That was very difficult to not cheer on there.
I was waiting for it. I thought it was just. I thought it was crickets.
I'm
like, oh shit.
No, I really wanted to support you there, but I had to stay true to this random exit that I decided that I do here, where I just say nothing,
leave nothing.
Yeah.